All right, good evening. Welcome for getting in. We're going to make sure that we acknowledge that any investment decisions or trading in the financial markets, it's critical that you conduct your own research and that past performance is not indicative of future results. Once again, thank you for stopping by. We are going into our recap, looking at the activity of the E-mini S&P market for the day of May 4th, 2023. So let's look at what occurred today. Where we want to start, the best place to start usually for a recap and also for a preparation is looking at the daily chart, because the daily chart is going to give us a story and it's going to give us an idea of what has happened in the last few days and what can potentially happen in the day that we're trading in. So let's start with the daily chart. And for daily, I am a big fan of the open, high, low bars. Love candlesticks, open, high, low give a quick summary of what happened in that day. So each one of these bars is representing one day's worth of trading activity. So just by looking in a glance, we can see the left tick is letting us know where the market opened, and the right tick is letting us know where the market closed. So this one bar right here is giving us all of today's trading activity. And we have the benefit of looking back to previous days so that we can get a story of what's happening. For example, yesterday, we look at the left tick is here, and we look at the right tick, it's here. So it opened here, closed here. Day before that, we had a left tick here, closed here. Day before that, we had a left tick here, right tick here. So open, close. Open, close, open, close, open, close. So just looking at those 4 days, we can get a story of what's going on in the market. And this is a pretty interesting and pretty clear story. So what does that do? It lets us determine the type of market that we are in. So currently we can see that we are setting up to be in a downward trending market. What does that do for us intraday? It lets us know that the opportunities that we're looking for to the upside are going to be limited, while the opportunities that we're looking for to the downside are going to be opportunities that we can let run a little bit if they're profitable. All right, we go back to the popular adage of cutting losers short and letting winners run. How do you know when to do that? Well, a big part of that determination and that split second choice has to do with the preparation that we did in looking at the market and the story of what's going on to let us know what is the probability of a trade to the upside going largely in our favor versus a trade to the downside going largely in our favor. So today we were looking for bearish trades just based on the recent market activity. So that is the power of the daily. Another aspect to look at on the daily chart is what has happened leading up to the days that we're in. So last 4 days, but if we go back before that, we see going all the way back to, let's say, May 10th, we were starting this upward channel, and we wrote this channel days ago, weeks ago actually, because this is what the market was doing at this time. It was trending upwards. So going back to May 10th, when we had this very strong upward trend, what happened? We bumped up against this zone here, which was a previous high that we experienced all the way back in February. Again, the market runs in cycles, and it's predictable based on the patterns that it has displayed in the past. So let's look at these patterns. High here, tried to break through this area here back in December. was not successful, got knocked back down. Made another attempt at this zone in February, was not successful, got knocked back down. So, taking those past two attempts into consideration, when we look at these last 4 days, it makes a lot of sense that this market broke down off of this zone in such a violent manner because the last two times it was not successful. So this third time is not successful. What this tells us is that there is a very significant hedge that the market is setting up at this price level. It's not inclined to go above it. So taking that into consideration, that sets us up for our activity during the day. So let's look at what actually occurred. And we're keeping these videos short. I wanted to spend a lot of time on the daily today because the daily is telling a significant portion of the story in terms of what occurred. So looking at the 2 minute, starting with the market open, we see today's activity was very choppy. Back and forth, back and forth. It was a significant battle between the bulls and the bears today. No one coming out ahead, no one showing dominance. You can compare this to a basketball game between two equally strong teams, and the score is very close. At halftime, it's very close, and as it goes throughout the game, it remains very close. What you're seeing is that today, there was no, the market didn't have any dominant player. The Bulls were not dominant, the Bears were not dominant, so it went back and forth. So that gives us the activity and the story, and we can trace that to determine that even though the market went down, as we see from this bar, it was not a smooth move. It was a very choppy, and it was a consistently choppy day. So that's how we can summarize that. So the benefit is that even though we knew we were in a downward trend, we still wanted to be very careful based on that type of chop. So that's it for today. We're going to get into a lot more details, but the takeaway from today is look at the story. What is the daily telling us, and what are those implications for our intraday activity? Again, have a good evening. Hope everyone traded successfully today, and we look forward to catching up on our next occasion. Have a good night.